Honorable Governor of the National Bank of Rwanda, Lord Mayor of the Kigali City, Governor of the Southern Province, heads of banks, development partners, distinguished ladies and gentlemen, all protocol observed. Welcome to today's presentation of the Monetary Policy and Financial Stability Statement by the Governor of the National Bank of Rwanda. I'm Bob Allen and I'm pleased to be your host this morning. As per our agenda, we'll have the presentation of the Monetary Policy and Financial Stability Statement by the Governor of the National Bank of Rwanda, Honorable John Rwangombwa, followed by a question and answer session with the audience. Distinguished guests, today's presentation, the Governor will talk about Rwanda's economic development and financial sector performance for the first half of 2020 and prospects of the second half of the year and beyond. Before we start, I would like to share some housekeeping rules. If you'd like to ask a question, you may write it in the Q&A section on your screens, or you may raise up your hand so that we'll be able to give you a chance to ask a question. You can, as I mentioned, you can also send in your questions after the Governor's presentation by using the Q&A session on your screens. We are live on our social media channels on Twitter, Facebook, and YouTube. And if there's someone who wants to join, you can share with them our link on our YouTube page, which is National Bank of Rwanda, or our social media channels, Central Bank of Rwanda. Or you can also use the hashtag MPFSS2020 to share your comments or questions that you may have. Ladies and gentlemen, allow me to welcome the Governor of the National Bank of Rwanda for his presentation. Honorable Governor, you're welcome.
Thank you, Bob. Our colleagues, government officials joining us this morning, I'm told we are joined by the Mayor of the City of Kigali, the Governor of our Northern Province, and the other government officials. Our development partners, I'm told we are joined by the country manager of the World Bank and the country manager of the African Development Bank, and any other that I haven't really recognized. Financial institutions and other CEOs joining us this morning of technology, even though would have preferred to meet you in person. This morning, along my colleagues here, I'll be presenting to you the key highlights from the monetary policy and financial stability statement that assesses the economic developments of the first half of 2021 and prospects of the second half of the year and beyond. I hope you all managed to access our last two editions that were published through our digital platforms, since it wasn't easy to convince. I start this to the assessment of our country's economic performance and outlook. According to the IMF, the economy is projected to recover from a recession of 3.2% in 2020 and grow by 6% in 2021 and 4.9% in 2022. The opening up of many economies will mainly drive this recovery, as COVID pandemic is contained through a massive rollout of vaccines. Over the course of the pandemic, global trend in goods and services have been volatile due to subdued global demand and disruptions in global supply chains. This had a dramatic negative impact on commodity prices, which led to record low prices for most commodities. However, the positive economic performance across the globe, most commodity prices have started to recover. As at the end of the first half of 2021, global commodity prices increased, reflecting a rebound in global demand. Energy prices rose by 63.1% from a drop of 36.6% in the same period of 2020, attributed mainly to the rise in crude oil prices. On the other hand, non-energy commodity prices increased by 36.5% after a decline of 3.4% due to high prices for all non-energy commodities, including minerals and agricultural products. Following this rebound in global demand and rising commodity prices, the world is projected at 3.5% in 2021 from 3.2% in 2020, and projected to ease again 3.2% in 2022. Despite the persistent uncertainties, one can firmly say there is a light at the end of the tunnel, with hope of the global economy recovering from the worst recession since World War II. Looking at our continent, for the first time in the last 25 years, Sub-Saharan Africa experienced a recession in the year 2020, with the GDP contracting by 1.8%. Today, the continent has started showing good recovery, with GDP projected to grow at 3.4% in 2021 and 4.1% in 2022. Despite this projected rebound in 2021 that reflects positive spillovers from strengthening global economic activity, Sub-Saharan Africa is expected to record the slowest growth globally in 2021 as the region struggles to bounce back from the pandemic, mainly due to lower access to vaccines, limited fiscal space, and weak monetary policy transmission mechanisms. Coming to our domestic front, like elsewhere, Rwanda's economy continues to recover from the impact of the COVID-19 pandemic. After going through a rough patch, we can now see a gentle turning point. Following 3 consecutive quarters of recession and an overall contraction of 3.4% in 2020, real GDP growth was 3.5% in the first quarter of 2021. And the overall annual growth for 2021 is projected at 5.1%, supported by sizable economic and other policy measures. Some sectors have been less affected by the COVID-19 and continue to support the economy, while others were heavily hit and are slowly recovering. In terms of output, the key sectors are agriculture and industry. The agriculture sector grew by 6.8% in Q1 of 2021 from 0.5% registered in Q1 of 2020, mainly driven by food crop production, while the industry sector recorded a growth of 9.7% from 1.9% in the same period. This recovery in the industry sector was broad-based across all its subsectors. The mining and quarrying subsector grew by 3.3%, construction by 14.4%, and manufacturing by 8.3%. The growth in these subsectors were boosted by government infrastructure projects and improvement in foreign demand for locally produced non-traditional exports, which supported the manufacturing industries. This pandemic has significantly disrupted international travels and flows of goods and services, with significant spillovers to some of our key sectors, like the service sector. In the first quarter of 2021, Rwanda's tourism-related services, that is air transport, hotel and restaurants, travel and travel agencies, contracted, leading to a slow recovery in the entire service sector. This was, however, partially offset by the good performance in the information and communication subsector, which grew by 18.2%, and financial services by 10.4%. This sluggish recovery in tourism-related services is in line with global tourism developments. Information from the World Tourism Organization shows that the negative impact of COVID-19 on global tourism is likely to stay until at least 2024, when the global economy is expected to fully recover to the pre-COVID-19 levels. However, as the global economy continues to recover and COVID-19 restrictions are eased, there is hope for a rebound in the service sector in general, maybe much faster than the projected 2024. Now, when we look at our high-frequency economic indicators, it suggests an overall good performance in the first half of 2021, as evidenced by an increase of 22.1% in the composite index of economic activities from a contraction of 2.3% in the same period of 2020. The opening of the economy, supported by vaccine rollout as well as monetary and fiscal policy interventions, will be the backbone for continued recovery in the second half of 2021. Now, looking at the external sector, Rwanda's external sector has mirrored the general economic recovery, with export receipts rising by 16% in the first half of 2021, reflecting a continued recovery of merchandise exports. Improved global demand that drove the increase in commodity prices contributed to the good performance in traditional exports, that's coffee, tea, and minerals, among others. Similarly, the recovery of domestic manufacturing activities boosted non-traditional exports that grew by 63.6%. On the other hand, imports of goods increased by 6.1%, mainly driven by reflects strengthening investment activities. Similarly, imports of intermediate goods were mainly driven by high demand of inputs and raw material by domestic industries, in line with Made in Rwanda program. As a result, Rwanda's trade deficit slightly widened by 0.1% year-on-year in the first half of 2021. And in 2021, the current account deficit is expected to widen to 13.4% of GDP, higher than 11.9% registered in 2020, reflecting the sluggish recovery in key service sectors, notably travel and tourism, coupled with growing imports as the economy recovers. This growing current account deficit will be financed by remittances and government inflows, as private capital inflows such as FDI are projected to remain weak in 2021 due to uncertainties of the evolution of the global pandemic. However, the current account deficit is projected to reduce in the medium term, reaching 9.6% and 7.5% of GDP in 2024 and 2025 respectively, driven by projected recovery in services and access to COVID-19 vaccines. In line with external sector developments, the Rwanda depreciated by 1.51% against the US dollar by the end of June 2021, slightly lower than 1.58% recorded in the same period of 2020. This slow depreciation rate reflects the gradual improvement in foreign exchange inflows, despite the high demand for forex to cater for the growing import bill. In 2021, the foreign exchange market is expected to remain stable, with adequate foreign exchange reserves held by the central bank covering 5.1 months of prospective imports. So I spoke earlier about global inflation. Let me now turn to the domestic price stability side, the main objective of the National Bank of Rwanda's monetary policy. In the first half of 2021, headline inflation eased to 1.4% on average, compared to 8.5% recorded in the first half and 7% recorded in the second half of 2020. This slow inflation environment is reflected in the main CPI components. In the first half of 2021, fresh food inflation stood at negative 1.1%, foreign good agricultural production supported by favorable weather conditions from 21.4% recorded in the first half of 2020. In the same period, energy inflation eased to negative 0.1% from 10.2% owing to the base effect from solid fuels. That's charcoal and firewood component. So headline inflation also reflects a base effect from the transport component. As you remember, last year, public transport fares were increased in May as buses were allowed to carry only 50% of their capacity, and this increase was reversed in October. In the outlook, headline inflation is projected to average 0.7% in 2021 before peaking to around 5% in 2022. Accommodative in the first half of 2021, with the central bank rates kept at 4.5%, which contributed to increasing liquidity in the economy, and this supported commercial banks to continue financing the private sector. In the first half of 2021, the interest rates continued to follow the downward trend of the CBR rates, with the average interbank rate dropping by 26 basis points to 5.19% on average compared to the same period of 2020. The repo and reverse repo rates remained fixed at the central bank rate from July 2020. When you look at the market rates, the average lending rates fell by 34 basis points to 15.9% in the first half of 2021, from 16.25% in the first half of 2020. And this decline was experienced for both individual and corporate loans. On the other hand, the deposit rate rose by 12 basis points to 7.73% in the first half of 2021, mostly linked to increased share of corporate depositors with significant amounts at relatively longer maturities. Broad money grew by 9.8% in the first half of 2021 compared to 10.4% recorded in the first half of 2020. This was mainly due to an increase in credit to the private sector. The expansion in outstanding credit to the private sector was essentially driven by new authorized loans disbursed in the first half of the year. The growth in new authorized loans was 26% in the first half of 2021 compared to a contraction of 9.2% recorded in the first half of 2020, and mainly reflects major sectors like restaurants and hotels, personal loans, public works and buildings, and the community. Now, when we turn to the financial sector performance and its stability, the performance of the financial sector continued to be shaped by the economic environment characterized by the effects of COVID-19 pandemic and the accompanying containment measures. However, despite the challenging macroeconomic conditions, the financial sector remained sound and stable, and its assets continued to grow by June 2021. Total assets of the financial sector expanded by 20.3% to 6.9 trillion in June 2021, with all subsectors recording high growth, as we'll show in the following paragraphs. The financial sector also continued to deepen, with the proportion of their assets to GDP steadily increasing from 33.8% in 2010 to 56.6% in 2019, that's pre-COVID, compared to an average of 58% in sub-Saharan Africa by that time in 2019. But this continued to increase, and the ratio increased to 61.1% in June 2020 and 69.8% in June 2021. The credit to GDP ratio also increased from 29.8% in June 21 to 26%, from 26.4% in June 2020. The financial sector continues to be dominated by the banking sector, with banks accounting for 66.9% of total financial sector assets as at end June 2021. This is followed by the pension that represents 17.9%, and microfinance sectors are the third and fourth largest components of the sector, representing 9.2% and 5.6% of total assets, respectively. Now, looking at the banking sector, it continued to grow during the period under review, with total assets increasing by 20% year-on-year by June 2021, higher than the growth of 18.5% registered in June 2020. This improved growth is mainly financed by the expansion of customer deposits, borrowings from international lenders, and the growth of the capital base. In the midst of the pandemic, we also observed that bank loans, which make up the biggest part of the bank assets, continue to increase. Gross outstanding loans of banks increased by 18.6% in June 2021, higher than the growth of 14.6% registered in June 2020. Strong performance of the banking sector during the COVID pandemic can be attributed to sufficient capital and liquidity positions prior to the crisis, on the back of recent regulatory reforms as well as past profitable performances. Now than ever, this crisis emphasized the importance of strong capital and liquidity buffers for the financial sector to withstand high degrees of uncertainties. In addition, timely fiscal, monetary, and supervisory policy interventions were also supportive in maintaining these prudential buffers. The prudential ratios of banking sector remained strong at the end of June, with capital adequacy ratio at 22.5% compared to the minimum requirement of 15%, while liquidity represented by liquidity coverage ratio was at 226.2% compared to the required minimum of 100%. However, credit risk is a major concern for the financial sector, as full recovery of the economy drags on in the most affected sectors, especially those affiliated to the hospitality industry. Non-performing loans ratio in banks increased from 5.4% in June 2020 to 5.7% in June 2021. Asset quality deteriorated mainly in sectors mostly affected by the pandemic, including hotels and commercial real estate. Non-performing loans ratio in the hotel sector and commercial real estate increased to 9% and 16% in June 2021 from 3.8% and 9.3% in June 2020, respectively. Looking at the microfinance subsector, the total assets of the sector increased by 16.8% in June 2021, higher than the 5.4% growth registered in June 2020. The improved growth of assets of the MFIs is mainly reflective of growth of deposits and equity. Total deposits of MFIs increased by 18.9% in 2021, up from 7% growth registered in June 2020. The growth of deposits is associated with the reopening of the economy and improved performance of the agriculture sector, which is main contributor to the microfinance sector. On the stability perspective, the microfinance institutions continue to hold enough capital, with capital adequacy ratio standing at 35.4%, above the 15% minimum prudential requirement. Asset quality also improved in MFIs, reflecting the gradual rebound of the economic performance. Non-performing loans of MFIs dropped by 9 billion to 14 billion in June 2021 from 23 billion in June 2020. During the same period, the NPL ratio declined to 6.6% from 12.8%. The industry-wide liquidity ratio of MFIs stood at 106%, against 30% minimum prudential requirement, in the period under review. Now, when we look at the insurance subsector, we also see assets of the insurance sector continuing to grow in the first half of 2021, with total assets increasing by 16.3%, higher than 14.9% growth observed in June 2020. This growth in assets is mainly supported by growth in business, that's premiums, and retained earnings. The insurance subsector remained adequately capitalized during the first half of 2021. Private insurer solvency ratio stood at 147% as at end June 2021, compared to 156% in June 2020, and well above the regulatory minimum requirement of 100%. The subsector also held adequate liquidity buffers. Aggregate liquidity current ratios were at 238% and 293% respectively, against 100% minimum prudential requirement. However, private insurers' liquidity of 94% was below the prudential benchmark of 100%. This issue was more prominent in non-life insurers, whose liquidity ratio stood at 81% in June 2021, due to the increase in premiums and other receivables, as well as other illiquid assets like investments in property. Life insurers' liquidity stood at 145% above the 100% prudential benchmark. Similarly, assets of the public pension fund continue to increase. Total assets of the public pension fund increased by 25% in June 21, higher than the growth of 12% registered in the corresponding period of 2020. The main drivers of this growth was changes in market value of investments in quoted and unquoted equities, land and property, government securities, and bank deposits, supported by a growth in investment income as well as additional pension contributions collected. It is important to note that public pension share is 95% of the total pension subsector. Lastly, when we look at the payment system side, as we all know, COVID-19 facilitated the adoption of digital payments, spurring increased usage, as evidenced in the increases in number of subscribers of mobile payments, mobile banking, and internet banking, as you can see on the screen. Both values and volumes spiked in the period ended June 2021, mainly driven by the adoption of the merchant payments. Looking at the merchant payments itself, this increased from 64, that should be million, not billion. This increase from 64 million, that's on monthly revenues, 64 million to 152 million in June 2021, from June 2020. So as I conclude, let me wrap it up with a summary of the outlook for the remaining part of this year. GDP growth is projected to increase by 5.1% in 2021, reflecting continued recovery in the second half of 2021. This is expected to be supported by the full opening of economic activities linked to the continued vaccine rollout, as well as fiscal stimulus packages and accommodative monetary policy stance, and good agriculture performance. Going forward, inflation is projected at 0.7% in 2021, before picking up to around 5% in 2022, owing to pressures from the rise in international commodity prices. Despite the uncertainties around the path of COVID-19 pandemic, the financial sector is expected to remain sound and stable. Financial institutions associated with the negative impact of the COVID-19 crisis. That said, the National Bank of Rwanda will continue to closely monitor domestic and global economic conditions and stands ready to take appropriate measures when and as necessary. Once again, thank you for accepting our invitation. We now open the floor to you for any questions or comments. And I'm happy to inform you that a detailed copy of our monetary policy and financial stability statement is already published on our website, and the link to the document will be provided in our social media channels. I thank you.
Thank you so much, Governor. A few takeaways from the Governor's presentation. We have seen that despite the recession that the global economy experienced in 2020, the world economy is projected to recover this year. And as he mentioned, strong economic growth is experienced in 2021 Q1 was mainly led by agriculture and the industry sectors. And in 2021, the financial sector is expected to remain stable and sound. We are now moving on to our next session, which is the question and answer session. Joining the Governor this morning for this session is the Chief Economist, the Executive Director of Financial Stability, and the Director of Monetary Policy at the National Bank of Rwanda. As mentioned before, you can send in your question through the Q&A option on your screens, and you can also raise up your hand and we'll be able to welcome you and you can ask your question. The MPFSS booklet is already live on our website. You can download to get the full detailed information.
I can see there's already one question up there. Can you read it out?
Yes, we have a question from Alain Mucho. He's asking, what are the key drivers of reduction in NPL across the market? Did the banks do recoveries during this period? And also we have Noel, who is asking, what is the current rate of inflation?
Yes, we didn't register reduction in NPLs, though it was a slight increase, but I will request our Executive Director for Financial Stability, please, to give more comments on that question.
Thank you, Governor, and thank you, Le, I believe, for that question. So indeed, as Governor has mentioned, we actually did see a slight pickup in non-performing loans, not a reduction. As Governor mentioned, NPLs increased from about 5.4% in June 2021. And as mentioned, the increase is mainly in sectors that have been most affected by the pandemic. In the hotel subsector, in commercial real estate. In other subsectors, there's been, I think it's remained more or less stable. Recoveries were a bit complicated throughout most of 2020, of course, due to economic performance, but also because of challenges that existed, of course, for example, in the recovery of mortgages and things like that. Auctions were at a halt. So we did not see a significant recovery in non-performing loans between 2020 and the first half of 2021. However, as things open up and now the system for auctioning of property is up and running, and the system the process has been streamlined, we expect that to pick up during this second half of 2021 and into 2022. Thank you.
Yeah, thank you. I think I did a lot of talking, so I request my colleagues to be answering the questions. We are together now, but let me ask Kasai to answer the question, the current level of inflation.
Thank you, Governor. On the question of regarding the current level of inflation, maybe if I talk about the current, I would like to talk on the level of inflation during the month of July, which was a negative 0.4%, which means that it's close to 0%. But as the Governor mentioned in the presentation, when we look at the average inflation for the first 6 months of 2020, maybe we can recall that it's 0.7%, and the projection is showing that inflation is going to slightly pick up going forward. Thank you, Governor.
Okay, thank you. I think we have a question here on the current rate of, the general financial inclusion status. Incidentally, we still rely on the FinScope surveys we do every 4 years, and I think the last one was published last year in 2020. But we are working as the Central Bank and the Ministry of Finance to see if we can have interim indicators of financial inclusion, and we hope by end of this year or latest early next year we should have interim measures of financial inclusion. But for now, we can only give the numbers we had from the FinScope of last year, where we had financial inclusion in general, I think at 93%, and formal financial services at 77%, formal financial inclusion at 77%. But we hope by next year we should be able to have some interim measures or indicators to show where we are with the financial inclusion without waiting for 4-year surveys. Yes, please wanted to add something?
Governor, I think that also in addition to the information supplied by FinScope, we also know that in the recent past, digital financial services have been a key enabler for greater financial inclusion. Now, when we look at the data on subscribers and users of digital financial services, we see a steady increase, and that points to something about greater usage of digital financial services. So if I'll give an example, we saw that the number of subscribers that were using mobile payment channels increased from 5 million in June 2020 to over 6 million in June 2021, and that has a lot to do with the pricing and the move for more touch points for digital payment services. So that is also an indicator. Maybe it's not directly measurable in terms of percentages, what that has contributed to, let's say, from 93 to what exactly. But when we look at the supply side of things, we see that financial inclusion continues to increase steadily. Thank you.
Yes, I hope I can be able to read the next one.
Yes,
Bob,
I can.
Yeah.
There's another question that says that banks were restricted from it has gone down, has disappeared. Okay. Banks were restricted from distributing the FY 2019 dividends and declaring any dividends for FY 2020. This had an impact on the trading of some of the listed banks. What is the way forward on this?
It meant that it affected the trading of the listed banks. At least from the numbers we see, we haven't seen any evidence to that. I think to the contrary, any serious investor would be happy to know that the institution they invested in can sustainably continue in business. And I think the fact that we decided to retain the dividends was to ensure that the banks or the other financial institutions were sitting on strong capital bases. At least they had a strong base to deal with any shocks coming from this crisis. And since we didn't know exactly the trend of this crisis, it was better to remain prudent in all ways, and so that decision was really to to ensure stability and sustainability of the financial institutions. So I can't give any concrete answer to what happens next year. It depends on the trends of this crisis. As we said, so far things look positive. Let's hope they'll continue positive. And by the way, one other thing that we have to note here is we said that the biggest concern today with the financial sector is the credit risk, and we don't think we have reached a peak of this crisis or this risk. As borrowers are reaching the end of their moratorium periods, that's when we actually know how they are able to pay. So I think by the end of the year, working with the banks themselves, will be able to assess. That's decided by us sitting here. It's something decided based on numbers, and in fact, unfortunately, we had a lot of uncertainties. So that's what I can say on the issue of dividends. And it's not only for banks; it was across the financial institutions.
Thank you, Governor. There are some people that have raised up their hands that would like to ask their questions. We have the Lord Mayor of the city of Kigali who would like to ask a question. You're welcome, Lord Mayor. You can unmute, and you can also put on your video.
Thank you so much, Alan. Thank you, Honorable Governor, for the presentation and the updates on the financial stability of the country. I want first of all to thank the performance that you had, and mine is going to be on the, we've been experiencing a slowdown. Basically, that is the effects of the pandemic that has pushed us into sort of a recession, but also that has severely impacted on human capital. When you look at what we do from the local government side, we're creating some kind of jobs that we believe that are going to contribute to the GDP. One would love to know if for instance, I've put in my Mihigo a target of creating 50,000 jobs in the coming year. To which extent these are going to contribute to the GDP at a COK level or countrywide, so that at least we can be able to align to the expectations. That will definitely be helping us to be able to actually to say that I'm targeting something that is measurable in indication that the GDP is increasing also with that contribution. You also said, Honorable Governor, that our projections in the near future is going to be 5.1, but the first quarter was mainly driven by the agriculture and the industry sectors. We know that also the manufacturing industry is a key. If I look at the special economic zone and how many industries that we have there, but also some other potential investors in that area, don't you think that we can also see what is it that we can do actually to boost that manufacturing industry that we believe is a key? Because when we create jobs, those are targeting again those specifically the manufacturing industry, and eventually the agribusiness that has not yet, probably in the city of Kigali, that has not yet picked to that extent. We need to know what is it that again can do. I think our sister was talking about resuming, I don't know what she qualified being eventually the non-performing loans that are going to be, the issues related to auctioning properties. For us who are meeting regularly, some of the business communities, when we are talking about the pandemic and how we can mitigate pandemic, resuming activities on the small scale, there is an uncertainty that is being expressed in the future. Banks are being very prudent, and operators, economic operators, business communities also being affected by the pandemic, and we are definitely seeing the curve going up, especially for the non-performing loan. Some businesses are being closed, and we would love to see what is it that probably can be lessons or advices that we can actually bring up this, you know, way of resilience from the business perspective, so that we avoid another curve going down when the businesses are being closed. Basically, we see the medium and small enterprises being very, very affected, and the jobs are being created are not sustainable if they don't absorb the stability that we expect. Yeah, thank you so much, Governor.
Thank you so much, Lord Mayor. We can take one more question. We can take one more question from.
I think let's first respond to the mayor's questions, and thank you, Lord Mayor, for your comments and questions. My colleagues will chip in. So one, on the first question, it's a good question. It's like if I'm starting a program or a project that will create, say, 50,000 jobs, how do I know what the contribution of this project to the overall economic performance? We don't have really a system that go to that granular level of assessing each particular project's impact on the economy. We look at the macro, we look at the industry or the sector. Like when we say manufacturing, we look at the entire manufacturing sector, its contribution. For example, if there's a specific investment in a project and that has an impact on the economy, but also the job created, as you rightly said, these are spillover through the consumption by the staff being employed by this project. So at the moment, we can't really tell you that this specific project is going to contribute to this percentage to the growth of the economy. What I can tell you, it's really positive when we are looking at the entire sector. Of course, sector is made up of these small components within the sector, but I have my colleagues here, they can chip into that. Then the other question was on, it's a key question that we all have on the possibility of many businesses failing and they end up closing down. One, it's an issue for the business itself, not just to the investor in this business, or the promoter, but also to the economy in general, because this business was contributing to the economy and to jobs lost. But more so to our concern is what impact would this have on the financial sector. So I think we can only see this through the different policy measures government has taken or interventions government has taken. Like the Economic Recovery Fund was really to target sectors or businesses that were heavily hit by the pandemic and try to support these businesses to give them breathing space. At the beginning, we expected maybe the pandemic would take 1 year or so. Unfortunately, it has been more protracted than we had expected. For those who, some of you know Thierry in his job as a senior economist in the Ministry of Finance. Today, Thierry is our new chief economist, and we are happy to, he joined us this week, and we're happy to.
The key sectors, the key industries applying of construction materials to build, for example, factories. So the program is spearheaded by RDB, and these two, the new investments in the Economic Recovery Fund, and are making us think that we can achieve the growth of 5.1% this year. As you can see, mainly the main driver of this growth is...
And what is the outlook of 2022? And
I think we had given that. We had indicated that the Rwanda depreciated by 1.51% in the first 6 months of this year. We mainly track the performance of our currency against the dollar, because the rest of the currencies, its performance is linked to the performances of those currencies against the dollar themselves. Less depreciation this year, as said. We saw recovery of exports, at least increased inflow foreign exchange, though there's still increase in demand of imports, or the import bill also increased in the first half of this year. But at least when one increased by 16%, I think the other by 8%, the imports by 8%, exports by 16%. And so, though there's depreciation, but it's still minimum at 1.51% in the first half. I think today we've reached slightly above 2% by end of August, and we can say it won't go beyond 4% by the end of the year. So we don't expect uncertainties in the remaining 4 months of the year. And as we said again in the presentation, we're sitting on comfortable reserves, official reserves, so we can be able to deal with any shock if there is. Thank you.
Christian Mizero would like to ask what was the main factors behind the deposit rates which increased, while the loans rates decreased, as loans and deposits rates most of the time are correlated.
Let me request please to handle that.
Thank you, Governor. Indeed, there was a slight increase in deposit rates in the first half of 2021. From where we sit, we see the reason behind that having been there was a bit of tightness in liquidity in the first quarter, I believe, of this year. And that led to an increase in rates charged by large providers of liquidity, especially the share of corporate deposits. So as that share increased, and I guess that also led to a slight increase in interest rates in the first half of 2021.
Thank you so much. We have a question from Collins Mai from the New Times, asking about the digital transactions as share of GDP in H1 of 2020. And also connecting to that is a question from Alex Nare, asking, is the bank or related organs tracking the size of the digital economy? The next question is from Dr. Jonas. He says, a well-balanced monetary policy is normally a matter of finding an appropriate balance between stabilizing inflation around the inflation target and stabilizing the real economy, production, and employment. But the COVID-19 creates unpredictable situations. Do you think that for the National Bank of Rwanda, the challenge will be to attempt to make the best assessment possible of the manner in which potential output and growth may be impacted by both the unpredictable COVID-19 pandemic and the regulations resulting from it?
I hope I get the question rightly, but yes, as rightly said, our main objective as a monetary authority is to ensure economic stability, and that is linked to inflation movements. But incidentally, our inflation is mainly supply driven. It's mainly affected by agricultural performance. Again, as you saw in the presentation, as we get good agricultural performance, inflation always goes down. And as like last year when we had beginning of last year when agriculture wasn't good, it affected our inflation, went above our benchmark of 5%. And this year, because inflation, agriculture is good, and in fact that plus the best effect of the transport fares, as we said, has pushed inflation to negative now for the last 2 to 3 months, and that's why we expect by the end of the average on the year will be around 0.7%. So by next year, these best effects will be smoothened out, and we expect also pressures from the global trends, especially in commodity prices. That's why we expect, again, inflation to rise to around 5%. So for now, we don't have any challenge with the trends of inflation. As we said, we don't have any inflationary pressures. So that gives us room as monetary authority to keep an accommodative monetary policy stance that in the end supports the financing of the real sector through the banking industry. I think that's the main message we are giving, that was given after our monetary policy committee meeting 2 weeks ago, and the same message we are giving today.
Thank you, Governor. We have a question from Emmanuel Nachirutimana, who says, the National Bank of Rwanda recently regulated the fees which was charged on mobile transfer from to account holder in banks, MFIs to mobile bank. This was highly appreciated. However, the payment via Momo is now challenging as MNOs started imposing charge of 0.5% on transacted amount. I'm afraid that this would impact the digital payment. What is the National Bank of Rwanda's stand on this?
Yeah, it's an interesting question, and it's an interesting issue. The reality is we want to promote digital channels. We want to promote cashless, as we said, as a country. But at the end of the day, we know that the investors in these digital channels also have to receive some revenues for them to sustain the investment and the business. The decision taken by the central bank last time on the push and pull fees was within our mandate to protect consumers, because we could see double charging. If, for example, a merchant transacts during the course of the day, and by the end of the day deposits their money on their bank account, and you charge them for that deposit, the following day they are withdrawing this money to continue their transactions, and again you charge them for withdrawing this money. So there was that sort of double charging, and really against the encouraging these merchants to use these digital channels. So plus again, if this merchant was to take this cash to the bank, they are not charged as such. So we looked at this, and within the powers of the central bank as given by the law on consumer protection, we had the authority to regulate that push and pull. But for the other services being given by the service providers on these digital channels, like if you using the merchant number to transact, these providers also need to generate revenue from their products. These are products they're putting on the market, and they're investing in these products, and so they have to charge for the products they are putting out on the market if they are to sustain this business. So we understand the rationale for this charging. I think what the government did was to negotiate with the service providers. If you remember, before COVID-19, these merchant payment channels were charged 1% of the value of transaction. And so government was able to negotiate with the service provider to reduce that charge from 1% to 0.5%. And we also want to stress that people shouldn't really take this as just a cost, because it's a charge for the I don't know how you would, for efficient way of transacting, doing your business. If you're receiving money through digital transaction, if you really received all this money in cash, at times people deceive themselves that when I receive money and at the end of the day I take it to the bank, there's no cost to it. But when you put up the risk of handling cash, the movement from your premises to the bank, the risk associated to that, that is even, I think, more costly than the 0.5% charged. So we need to understand that this charge is inevitable. I think what our concern would be is the charges to remain reasonable and don't kill the market that has just started. I think that's our main concern. And we remind the public that this charge is to the merchant, not to the customer that is buying goods. So the surcharge, what we call surcharge, it is prohibited for the merchant to offload this charge to the customer. It's a charge to the merchant that is benefiting from this product of using the Momo number to sell their goods and services. Thank you.
Thank you, Governor. We have someone who has raised up their hand. Stella Umhoza. Stella Umhoza, if you can hear us, you can unmute yourself. Okay, I think we'll move on to the next question from our Q&A session. Patrick Habimana is asking, most of the capital goods are imported and hence the need of dollars. How can the depreciation of francs be minimized?
No, I think as a fact, that's why we end up with a depreciation almost every year. It's the structure of our economy is that we still have an import bill that is much bigger than our export earnings, and therefore the demand and supply rule here apply. So we end up with a depreciation, but as I said, good enough, the depreciation is not really big. It's an average of 5 or below 5% on annual basis. So we think that's normal until we are able to maybe get some natural resources here that increase our export earnings. I think the depreciation in fact is normal to also maintain our currency competitiveness. So that's what I can say to that question.
Thank you, Governor. We have another question from Roland. Could you say something more about the significant increase in the pension 25%, which you mentioned was mainly due to revaluation of assets? Seems very significant.
Can you comment on that?
Yeah, thank you, Governor. I think that the increase in pension sector assets is not necessarily due to revaluation. Revaluation was only a small contributor to that increase, maybe about 1% or even less. And that's in response to some of the quoted equities that the pension sector holds. Some of them moved up, some moved down. But overall, the change in price of both quoted and unquoted equities and some other properties that they hold, there was a revaluation gain, but it's meager compared to the 25% increase. The increase is mainly due to new investments in different asset categories, be it government securities, be it properties that were acquired. And that's on the back of investment incomes that they earned, as well as pension contributions collected, which were then invested in these asset categories. So revaluation is a contributor, but it's only a very small contributor to that growth.
Thank you so much. We have another question from someone who is anonymous, and they're asking, how do we relate the current inflation, which is around 0, to the Rwandan currency value compared to other currencies in like USD?
No, the inflation, as we said, the reduction in inflation or the deflationary status we're in today was mainly driven by good agriculture performance. So when you look at agriculture inflation, it's in a negative. It was also driven by the base effect of the transport fares from last year. As we said, last year, public transport fares were increased in May and then reduced in October. So by next month, that effect on transport will smoothen out from the inflation numbers. And inflation doesn't directly link with the value or depreciation of the Rwanda. I think the only component that comes into inflation is what we call imported inflation. It's not direct, like if the Rwanda has depreciated by 5%, it immediately translates into inflation. It depends on how our trading partners, the depreciation between the dollar and our trading partners, and that's how it transcends into the Rwanda. So today, imported inflation is still so minimum. And I said again in the presentation, what we expect the inflation next year going up to around 5%. That imported inflation is expected to contribute to that because of the global demand increasing, and as you saw, we expect global inflation to remain slightly high. Again, you saw that remaining at 3.2%. So I think that's what I can say, but I have our economists here. I don't know if they want to add anything. They're the chief economist, the director. It's fine? Okay. Thank you.
Thank you, Governor. We have another question that Francis Ibe asked. When will the central bank roll out an e-currency for Rwanda? And how will it regulate the cryptocurrency in Rwanda?
I think we've said that before, and the answer to that is we are still carrying out studies linked to that, so I can't give any timeline to that effect. Thank you.
Thank you, Governor. With your permission, Peace would like to add. Yes, please. Go ahead.
Sorry, Governor, I just wanted to, there was a question that was asked earlier that we did not respond to on the share of digital payments to GDP. As at end June 2021, we'd actually exceeded 100% we were at par with GDP, and that's with projected GDP numbers. The same question also, revolved around, what do we have, what are our thoughts around expanding? And I'm paraphrasing, forgive me for that. But my understanding of the question is, what are thoughts on expanding digital financial services beyond just payments? It's the desired place for us to be. We are not yet there. We would want to see digital financial services expand to beyond payments, to cover other financial services, be it, I think we're already seeing some growth on digital credit, digital savings. Would want to see more space, more growth in digital insurance, wealth management, collective investment schemes, the whole array of digital financial services, of financial services provided digitally. But that said, I think it's also worth noting that, we've come a long way. We've come from a place where digital financial services were dominated by the purchase of airtime, by transfers of funds from one person to another. So one of the trends that we've actually noted that is worth celebrating is the expanding proportion of merchant payments to total digital financial services. So as that increases and people become more aware of different products that they can enjoy on those platforms, then the more services we can have onboarded on these platforms. Thank you.
Thank you. Thank you, Peace. Governor, with your permission, I'd like to take one more question or two.
It depends on, we can give ourselves maximum 15 minutes depending on the questions we have on the screen. Otherwise, we can try to wrap it up.
Okay, Governor, thank you. Another question from someone is asking, so how is digitizing transactions affecting monetary policy indicators?
I think it's positive developments, and that's why we are active working with other stakeholders to drive the cashless. So the more we move digital, the more economic transactions are moved from informal to formal, and the more we can be able to capture it within the financial services transactions, and so that will help the monetary policy to take decisions based on informed decisions. So it is a positive development if we move digital, because that will help us to have full information on several economic transactions, and therefore it can help us to take more informed decisions.
Thank you, Governor. Singis Guange is asking, what is the position of BNR on the recent rise of central bank-backed digital currencies?
I don't know what central bank-backed means, but what we know is that, as we said, even ourselves, still doing studies around central bank digital currencies, and across the globe, I think we have about 2 or 3 central banks that have started piloting. So not central. Okay, there's one in the Caribbean that has embraced the Bitcoin. I would say that is also still a case study that we are all monitoring. But we know China, a central bank of China, started experimenting or in the pilot phase. And most of the other central banks are really carrying out studies. I think the other day, Christine Lagarde, president of the European Central Bank, was saying they've given themselves 2 years to really do the studies and see whether it's feasible, whether it's necessary, and then at the end of 2 years they will decide whether they move into it or not. So there's still a lot of uncertainties around this, whether it's really necessary and what it means in terms of the financial architecture in general. How does it affect it? How does it improve it? So there's a lot of developments we are tracking as we do our own, as we try, in fact, to partner with some of these advanced central banks. So there's still a lot of work to be done before we can conclude on the positives or negatives of these digital currencies.
Thank you, Governor. We have a question from Patience Mutesi, who says, good to see that exports grew by 16%. What has the trend been for services exports?
Yeah, when we look at last year, we see growth in service exports by 12%, and this is mainly linked to the base effect of last year, because last year, like, air transport was almost zero. And so this 12% is mainly attributed to increase in air transport and peacekeeping operations by our defense forces. Okay.
Thank you, Governor. Our next question is, it is from Pierre Cravier, who says there is an increase of remittances, but the figures could have been even higher, but the cost of transfers is limiting that move. What are the actions taken by the National Bank of Rwanda to reduce those costs?
Yeah, it's true, and that's a challenge across our continent. But I think when we look at the developments in the digital space, that's where we see the answer. I don't have the numbers specifically here. Maybe we can do that next time. When we try to track what the cost was like 5 years ago and what it is today, because today most of our remittances are coming through digital channels, and that has reduced the cost. It is still high, yes, but it has significantly reduced. And as these technologies, solutions continue to be rolled out in different countries, we expect this to really go down. So it's what we do as a regulator is to create an enabling environment for the innovation, for fintech innovations, and then through the different technologies coming up, we are going to see the cost of remittances really going down.
Thank you, Governor. We have another question from Anonymous saying that, thank you for your good presentation. My question is, when can we expect to have a 24/7 live clearing transaction, interbank transfers?
Yes, good question. It's unfortunate. We expected to have gone live 24/7 by end of November, but technology is technology. I think we've been pushed to, in fact, we've been advised by operators that November might be towards the end of the year, and so if there is any challenge with the rolling out the new products, might affect the closure of the year by the financial institutions. So we've agreed to push that to, I think it's February next year. But at least today we've gone to 16 hours. So we used to close the clearing house at 6. Now we close it at 11, at 23 hours. So at least we are now 16 hours, and by February next year, we should be going to 24 hours.
Thank you, Governor. Next question says, thanks for your presentation. Would like to know what impact has had the global inflation to the economy in Rwanda.
I think I've already answered that. So we don't have any big imported inflation, but I don't know if you have any details, Kasai, on that. But so far we don't have any problem with imported inflation. But Kasai, please give some details if you.
Thank you, Governor. On the imported inflation, maybe I can give the latest numbers. For imported inflation in July 2021, it was around 5.1, which is also around the medium-term objective of the National Bank of Rwanda's headline inflation, which means that though we see it as an element that we should track going forward, because we see that commodity prices and inflation globally might rise, but even it, we, as the governor has mentioned, the projection for global inflation is expected to be around 3.5, and this is also not seen to be very high, though, as earlier mentioned, the imported inflation is also at a level which is not higher than the medium-term objective of the National Bank of Rwanda. Thank you, Governor.
Thank you, Governor. And we can take our last question from Gilbert, who says that NPLs have somehow reduced compared to the last time due to COVID-19, favor attributed to those that had bank loans with respect to effects of the pandemic. What are you planning to do with commercial banks to keep NPLs as the economy is now recovering time to time, as many people are being vaccinated?
Please, I hope you got the question. Please, can you answer that?
I'll attempt. Like we said, NPLs have actually increased. They did not reduce between 2020 and 2021, increasing from 5.4 to 5.7%. The drivers behind that, like we've mentioned, mainly is in the mortgage subsector, largely driven by increasing NPLs in commercial real estate. Some of these are facilities that were already struggling pre-COVID. So come COVID and issues around occupancy becoming more problematic, so we started to see an uptick in NPLs in that category. We've also already mentioned NPLs in the hotel sector. So those were the main drivers for that. So what are we planning to do to keep NPLs low? I think that, first of all, the mere fact that banks did intervene at the onset of the pandemic with restructuring loans that were previously performing, but for customers that were affected by the pandemic, that did reduce the burden on customers and manage them to sort of reorganize themselves before they can resume payments of these loans. So those deferrals are still in place. We've seen that a significant proportion, over 80% of the restructured loans have resumed payment. And so we think that that's one of the things that will actually contribute to enabling people to actually fully resume business activity before they can fully resume loan repayments. So that's something that we continue to work very closely with the banks to ensure that the loan book is reflective of the realities on the market going forward. And maybe while I still have the microphone, I'll also address two questions that had been asked that are similar to that. One was on the issue of collateral valuation, especially for MSMEs. I think it's an issue that we're glad that you've pointed it out, and I think the question was really more requesting for advocacy for BNR to advocate with RDB and other local government authorities to reduce the price for valuation and registration of low-value collaterals. I think that that's noted, and it's something that we will continue to follow up with other stakeholders. A related issue was on collateral realization. I think the person that asked the question was saying, we gave banks a deferral period because of the delayed process of loan auctions. And maybe just to clarify that we did communicate to the banks in June, I believe, clarifying the collateral realization periods that are to be taken into consideration. That still holds for now as we continue to evaluate, or as the pandemic continues to evolve, and until a later stage when different requirements are communicated, those will continue to hold. Similar to that, on collateral realization was, I think that's actually it. Those were the two questions that had been asked on collaterals. Thank you.
Thank you so much, Peace. Thank you. I want to thank all of you for your comments and questions that were asked. And if there are any questions that were not answered, we'll make sure that we answer them. And I would like to now welcome the Governor for his closing remarks.
Yeah, thank you, Bob. Maybe before we close, there's one question here that is interesting that I want to comment on. This question from Vianney on pyramid schemes. I think, as you state, it's really unfortunate that you see Rwandans continuing to work with the pyramid schemes and they lose money. So we've advised everybody that pyramid schemes are illegal schemes, because at the end of these are people with businesses, I would say, in the air that has no tangible product or service they are selling. And at the end of the day, it's bound to fail. So I know I think RIB and police have been doing their best to curb these illegal practices. But I think it's up to people to really shun these scam schemes. I don't know how people will continue to work with them when they know they are losing money, as you stated in your question. So there's nothing else we can do apart from advising Rwandans to avoid working with the pyramid schemes, because you can benefit today, but at the end of the day, you lose your money. And so police or RIB is not everywhere that whichever pops up, they will stop it immediately. I think it's just the awareness of the population that will stop these illegal practices. So otherwise, I wish you could have stayed longer than this. Unfortunately, it's difficult to keep people engaged online for longer periods. So we really appreciate your patience, we appreciate your time, and we appreciate your engagement in the different questions and comments you've sent to us. So we hope that next time, our next monetary policy and financial stability statement is in February next year. Let's hope that by then we'll be able to meet in person and go over the developments of the year, and looking forward to maybe a better 2022. So thank you all for being with us, and as Bob have just said, we are here. We can continue engaging with you on our social media channels. If there are any questions that remain unanswered or comments you want to send to us, please keep us engaged on our social media channels. So thank you. Have a good day, all of you.